Nasdaq got a very successful IPO for Lyft by the end of March, but the stock price went down below its IPO price the next day. Do you think it will put some pressure to all the other IPOs that are lining up this year?
The fact that it traded down below its IPO price doesn't change the amount of money that they raised that went to the company. The market sets the price every day. I'm not worried the fact that Lyft's IPO traded up and then a few days later was trading below its IPO price has anything to do with the fact that other companies are going to continue down that same path. There still is tremendous demand in the market for high-quality IPOs.
What could be the risk for the IPO market this year?
Well, there was a lot of capital from China that was raised in the first half of last year. iQIYI and Pinduoduo were two of the largest ones here in the U.S. I think that when we got to later in the year, some of the investors may have been overexposed to IPOs from China, and that may put a little bit of the pressure on the pricing, and some of that last third of the year made it more difficult for IPOs to get done.
In 1999, when the U.S. new companies raised roughly $108 billion amid the dot-com frenzy, among them 351 companies listed here in Nasdaq, and then the New York Stock Exchange only got 9 tech IPOs at that time. But this has changed dramatically during the past decade.
That was a very, very different time and place. People thought of Nasdaq and they thought only of tech. At that point in time, a lot of the largest companies in the world were very small. When Steve Jobs went back to Apple in 1997, the company's market cap was relatively small, and they were weeks away from potentially bankruptcy in a cash crisis. Fast forward 2 decades, and they're the largest company in the world, and one of the only two that have ever gone over $1 trillion of market cap. Nasdaq didn't have the 5 largest companies in the world in 1999. We do today. The dynamic of our competition with our domestic competitor has dramatically changed. They've made a big focus on trying to win tech IPOs because there have been more tech IPOs. Tech is where it's at. There are less industrial IPOs or financial IPOs or ones that they would win in the past. But at that same time, we've also seen a migration of companies who were listed on the New York Stock Exchange coming to Nasdaq. Pepsi-Cola and United American Airlines and Marriott and Walgreens have all transferred their listing to Nasdaq, which again reinforces the strong value proposition of Nasdaq. People say you're about tech, and I remind them that tech is our second largest vertical, that actually healthcare is the largest number of companies listed on Nasdaq. Our fees are a lot lower than our competitor. Sometimes hundreds of thousands of dollars differences between some of our largest companies and their largest companies. And we're sitting here in Times Square. 500,000 people from all over the world are walking through Times Square every day. So if they want to put a Chinese brand on our tower, tens of thousands of Chinese who are visiting New York are going to see that branding.
That is the way to attract more Chinese companies?
For large companies, Baidu, Ctrip, NetEase, Jingdong, we're the only exchange that allows them to be part of a major index. The Dow has 30 stocks. They're all U.S. stocks. The S&P 500 has 500 stocks. They're all U.S. The Nasdaq 100 is the only major index in the U.S. that allows companies from around the globe, the 100 largest companies on Nasdaq, to be part of that index. And so that's really significant for large companies as they make a decision on which market to choose.